All-time highs on the ES, the S&P 500. We have a lot to go over talking about the CPI. I definitely got to go over PPI with you, and we have to talk about why core CPI was so important, what this means going forward, how it affected the market. But let's do the basics. And then we're going to go through some of the names, and we're going to talk about the next trend that you must watch, because this is really important, what happened today. Everyone's kind of aware of where I am. If you're new, welcome. We are going to spend a little bit of time on the macro. We're going to have to. And this is a really important concept. But let's just do the basics. All right, so here's the ES, and we can see the close. We have an all-time high close right there. We take a look at the S&P 500, and we can see the breakout right along these levels. This is not a small move, and I want to be really clear about that. Even if you come here and you just look at the volume for a second. Let me just find the volume one. I'm doing a new, you'll see how this is white and black overlay. Comment if it's hard to watch. I'm using the app versus the actual browser. I find this a lot easier to use, and it moves a lot faster. So I was playing with this today, and I think this is what we're doing. But let me know about it, how it is for people watching. I appreciate it. So there's the S&P. If we go and take a look at the most simplest of indicators, we actually are above my line, which is a 50-day, but we're not above all the clouds, so I need to watch that. All those clouds are set at different levels, but I like being over to be above everything, but I'm above that, so I'll take what I can get. And we had diversification. We had broad-based diversification, and that's really important. We're going to get to that too. But what did this was the CPI. And this is the point that I really tried to hammer home yesterday, and I really appreciate your comments, because it lets me know that you're getting it, that people are actually getting it. And I just want to comment on that, how much I really appreciate the comments, because I always wonder where to go with this stuff and how to explain, why I'm even doing this. But to just go old school, for those that remember, we used to actually draw clean this off. We actually used to draw the old stool before someone was kind enough to send me some drawings of it. But you have a macro leg, you have a technical leg, and this is important, so stay with me. And you have a technical leg, and you have a fundamental leg. Now, the way we usually show this is macro, fundamental, and technical, right? And then what this does is really just tell you the what of what the heck's going on, tells you who's going to act because of what happened, and then technicals tell you when. And you look at it as that, right? So you look at it as a stool, you sit on the stool. If you're at a bar, sometimes you lean on the back, sometimes you're leaning on the front. Right now, we were full bore, leaning on the front, on our elbows, on the bar, period. CPI, it was everything, especially after PPI. We're going to get into the data and why it's so significant in a second here. But now you're shifting. So you have a shift today. And this is important. You're going to go from focusing on the macro, which is still there. This is definitely still here. But you're going to kind of swing over this way. It would have been more dramatic if I went that way and the arrow pointed that way. But it's definitely what you want to focus on. You're going fundamental now. And so what you have to do is go, well, what's the next big fundamental driver? And that would explain what moved today and why it moved, right? They don't go to where the puck is. They go to where the puck's going, right? Institutions are like locusts. Okay, we did the macro trade. Great, we're done. All right, what's the fundamental trade? And we'll get to what that is in a moment here, but I'm sure you can guess. That takes you to technical. So that's how we view the world here. And that I've done quite well doing that over the years. So if we get that, and this is what I want you to get, right? A bunch of people are going to post charts and say, look at this, it did this because of this indicator and blah, blah, blah. This chart looks a heck of a lot different if CPI didn't come out the way it did. If retail sales didn't come out the way that it did, it would not look like this. Could it still have possibly rallied? Anything can happen, right? Anything. I'm still waiting for Giselle to call. But this is what happened because of CPI. And that's how you have to look at it, all right? So where are we going with this? We're breaking out, period. That's the end of the story. That's where we're at. This is the turn. And you have to understand that this is a shift. Okay, why can we assume this is a shift? Now, let me explain why you can assume this is a shift. Does anyone know for certain? If you watch these videos, you know nobody knows anything with any certainty. There's an event next week that could change the dynamic of the fundamental market, but that would just lead to rotation of fundamentals, not lead to the whole index meltdown. So let's just go through that. Here's the NQ, and you're setting up and you're pushing. Let's take a look at the Qs. Okay? They're at all-time highs, right through all-time highs above everything. Let me walk you through this again. See where the SPY is? See how the SPY is not through everything? Take a look at the Qs. See how the Qs are through everything? So what does that mean to us? That means we need to start looking at the Qs divided by the SPYs again and start looking at what's happening. What does this do? Well, for those that are new and don't know, I take the Qs and I look at them relative to SPY performance. Really important. And this alone is worth your time in this video. I take a look at the Qs in relation to the SPY performance. Look at what it just did. This is a 55. I use a 12, a 22, and a 55. You should use what you're comfortable with. Look what it just did today. When was the last time we even attempted that? was back here, March 7th, and then it failed. So you know if this relative performance fails, because we know what happened to the market here, it's something that you want to pay attention to. And I do look at this, and I do look at it with moving averages, and I am seeing how these are holding in here. And that is significant to me. Now, if I do the simplest of things and turn this into a line and then just go back to like a 4-hour and go basic, well, you're going to note something here. We're going to get rid of the pre and the post, and you're going to see it already. Just straight up see it. And I do this sometimes, just will look at a line instead of just the candles, just to get a sense of what's going on. And it's pretty obvious, I think. So what do you want to see? You want to continue to see that outperformance, but that's a pretty clear undercut. And then of course you can just clone these. And by cloning them, you drop them down and you'll usually get a good setting of where you're sitting right there. And there's your channel. You undercut the channel, popped out. Now you're over on this side. Is this compensating for that, or are we setting up to move higher? I would argue with the volume today, you're setting up to move higher. So what we're seeing again is another shift in the market. Not only are we moving higher, but the second shift that I'm showing you right now is that the NASDAQ is setting out to outperform. Let's take a look at this on the hourly. Let's clean this all off and drill into this. What else are you saying? You've been in this base for how long? You can see where you broke right here. You can see that level. Let's pop it in. And again, these are the things that make the difference in your performance. Right? They're not going to be your be-all, end-all, but what you're doing is you're fighting for inches, right? So once you get the basics down, that's really what you're doing. And again, you can see it here. You would just clone this and go, does this lay in anywhere? And of course, everybody can see that, but sometimes it's helpful. So what we want to do is understand where we are. And now that we know that, what we'd want to do are look for areas of interest and then watch to see if we're able to get through these battleground areas, or does support truly become resistance as it's been. We don't have an answer to that yet. The answer that we have right now is that this is most certainly something that we must pay attention to. And we'll see this develop not only today, we saw it develop, but we'll see it develop tomorrow, and we'll see it develop the next day. And that's really important. Always, I have a thesis, and my thesis is there, but I will trade what happens. That's what works. Trading what actually happens, not what you think is going to happen, not waiting for the meltdown. This is what's happening right now, and therefore I want to trade this. And this is really important because one of the things today, people could understand why we dropped right away. And I explained this if you were in the room, for those that are watching this, and we were doing the live trading. One of the things I pointed out, let's do it this way. And this is a really important concept. Here's the tick. Okay, this is the NASDAQ cumulative tick. What's trading up? What's trading down? There are extreme levels, and you will see them. When you see these extreme levels, it is almost impossible for you not to have some kind of pullback. Usually you just want to look over 1,000. There it is. And you look on 1,000 on the downside too. So if you ever gap down or you gap up on like a big move, you always just want to see where you're at. And this is not as extreme, but we're going to put it there anyway. I think we are. If we can click on it, there it is. And let's just drop it right there. So you see like right around that 900 level, it's pretty rare to get one. But past couple days, you've had massive buying. But if you go take a look at even today, this allowed us to have patience with our trades because we know that the tick has got to revert back to neutral. And it did. It reverted right back down to here. And once it did that, that allowed us to get into names. So when we were long names like NVDA today, we knew this. So when we're watching these moves, we know what we need to do. We just need to have patience. We know they're going to rally up, and we know they're going to backtest because the tick's going to change itself. So the whole market's going to move, right? Especially large cap names. And that's exactly what happened. So this kind of stuff that was shaking everybody out, we're just looking at it and going, oh, you're overbought. Let the overbought work its way down, and then we'll figure out where to go from there. And that allowed us to stay in names like NVIDIA very long, and we were very fortunate enough to catch SMCI today for, I guess it's 100 points now at this point, which was just a monster trade. But you just have to look for these, and you have to look for those ticks. I actually had a full position on, got stopped out of a partial down here, and then when it flipped back up, I added again. You always have to follow your process. Even if you don't believe your process at the time, you still have to follow it. It's when you don't follow it. It's the devil's in the details. I can do a whole video on that. But once it flipped again, I just put the other half right back on and boom, off we went. I didn't think you'd get this, obviously. Again, I did not think you're going to get this. If anyone tells you that they're going to get this because this flipped that and then this is going to happen because of that, it's just silly. Okay, here's the 12, the 22, and the 55. Did we break out today because we broke above the 22? No, we broke above the 22 here. This goes back to the stool, and it's really significant for you as a trader and developing as a trader to get what I'm about to say. Just because someone points at a chart and says it did this because it hit here doesn't make it true. The reason the entire market moved was because of rates. And once you get that and you understand that you need to look at it, I'm not telling you to get a degree in economics, but you need to understand the basics. Once you get that, you're golden. Now, let's work backwards so that you can understand why you have to care about what I'm about to say. The entire market is moving based upon rate cuts. That's why the market's moving. So if we understand why the market's actually moving, or why the market has gone up since November and then down since March, it's all rate cuts. And we've gone over this in the Saturday videos where we talk about equity risk premium and why the markets are moving. So if you understand the actual mechanism and what's driving us, then monitoring the mechanism might be a good idea, right? And that's exactly what institutions do. So this is CME, and this is just FedWatch. Yeah, you can just Google what I said. You can pull this up for free. This is September. Right here. September was not supposed to be the rate cut. It was supposed to be, but as the week went on, if you look a month ago, you're at 44%. And then a day ago, you were at 48%. And now you're at 51%. So this is a tipping point. We had a tipping point today. The tipping point was we now have a 65% chance of a rate cut, actually a little bit more of a rate cut by September. And it's actually even pushed more to July, that there's even a greater chance of a rate cut in July now than before. But the tipping point for September is, at this point, it's greater than 50%, because you would take the 1% or the 1 cut and the 2 cut and the 3 cut and add them together, and you got a rate cut. All right. Why is this significant? And here they do it. They show it right here, the whole thing combined, 65.8. Why is this significant? Because if they cut sooner than expected, then the equity risk premium changes. They cut sooner than expected, then the equity risk premium changes. Therefore, they're going to buy broad-based equities. What happened today? Broad-based equities. What happened to most people today? They're waiting for it to rotate back down because they're looking at a chart, and we rotated back down for weeks, right? Or months we've been rotating back down. And they don't understand that that's over. I'm telling you that it's over. They now move the goalpost, and because they move the goalpost, they're going to put money to work. Do I know that for a certainty? No. No one knows anything for a certainty about the market. But this is what we have right now. And this is why they committed so much money. And this is why you're going to see the broad-based rally that we just talked about. Now, if we take a look at the inflation rate, U.S. inflation rate, CPI year over year, you had November, then we had the spike in December. Everybody said it was a blip. Then we just went 3.1, 3.2, 3.5. What is going on, J-Pal? And then we just have 3.4. I'm going, oh, okay, we got a little relax. Is this a reason to cut rates? Not right now. Is it a reason that they might cut rates maybe more in September? Yes, but wait, there's more to it. So then you go and take a look at core inflation, which is without food and energy. And then you go, oh, so this was where we were, and this is the lowest on record? Yeah, this is the lowest that we've had in the year. Yeah, it was just straight down. Everything without food and energy is just imploding. That is very different than what people were expecting today. And that is one of the core reasons why we did what we did. And it's important to get that. So when you look at this as a whole, and you can go to Trading Economics or investing.com, any site for free, and look at this. But once you get all this, your life gets a lot easier. So where are we going with this? Now that we know that 3.8, right, was the previous, 3.6, and that's lower. 3.5, 3.4, that's lower. Month over month was up. Core inflation previous, and this is where you're at. Once you connect all these dots and you start connecting what actually happened, and even if you look at retail sales, which went to 0, these are all signs that they have a higher degree probability of cutting rates sooner than expected. Couple that with the PPI revision yesterday, which we've gone over. Even though this was higher right here, we still have a revision. Tie that all together, and then you're going to start seeing them play some of the tech names. Now, why are they playing SMCI? And this is where I think it gets somewhat interesting. Now, this morning, if you were on the call, if you were on the pre-market live call that we did, we were very clear what we were doing. I was very clear what I was buying this morning as CPI was coming out. And as always, for those that are new, one of the key things that we do when these events happen is we mark off the bars. So, and by mark off the bars, let me show you. So you can see very clearly when CPI was announced and the reaction. It's 8:30. It's the same with the indexes. So you always mark that first 1 minute bar. I mark the 1 and then the 5, but you always mark it. Why? Because that's where the algorithms and high frequency traders are. And you will note, especially with the indexes, that they're the levels that you're going to stay at. So once this transpired and once we opened up, this is what we wound up doing. Now, this is not me. This is when I'm live trading and talking at the same time, and then John just types everything in. But we're out buying calls, which I did well with. I bought the calls into this dip, and I could explain why I did that in another video, but it was pretty obvious that we were going to bounce. But then also trimmed the calls as it traded up, and I locked more in. But then we started doing the SMCI long. I made it a swing trade, and it was pretty clear swing trade. But we also were long NVIDIA, or we're buying NVIDIA right in here. And if you watch the pre-market live, you note it. It's pretty hard to miss. You start hearing the beeps, and it's pretty obvious what I'm looking at. But anyway, what we started doing is we just start ripping. Now, does that mean I have to get out? No. Why did we stay up here today? Because they're putting money to work. The game's changed. Right? And now you might say, well, we don't know that. We don't know that. No, we don't. We don't know anything. Okay? We don't know anything. All right. And in regards to this, like SMCI, always on your stops, even if you don't agree with them, you have to, because you have to be able to trust yourself. And then we just ripped all day. Are you going to rip again like this tomorrow? No one has a clue. I would just tell you very clearly that when you look at names like SMCI and you look at these kinds of moves and we look at this kind of volume, the reason that SMCI is moving and which we have a position in the community. We have a position in Dell in the community, which gave us a really clear sign. These are the kinds of trades you want to look for. These undercuts and then these rallies. They're exactly what you want to look for. Anything with an undercut yesterday just exploded today. All they did was look for stock yesterday. They already knew what they were going to do. But anything like this, Dell, SMCI, why are they all moving? Now you can see right here that Thursday, May 30th, Dell has earnings, but somebody has earnings before them. And one common theme here, all week, and we wanted to see how it was going to go. But the common theme is everybody out there is raising their estimates on NVIDIA. Jefferies did it, and they moved it up 54% to a $1,200 target price. Everybody is moving up their targets on these names, on NVIDIA. And they're saying they're looking at accelerated earnings. Now, into the quarter, they're expecting a lot from NVIDIA. Now, let me explain how this is going to work. Pardon me. They're explaining a lot from NVIDIA, but what if NVIDIA doesn't deliver? It'll be a bloodbath. NVIDIA will get decimated if it doesn't deliver. The bottom line is, this is the next leg in the stool. They've gone now from where everyone was worried about macro to everyone now is looking at the fundamentals of the market going, if we're not net long NVIDIA and NVIDIA crushes after the bad quarters that we just had in here for our limited partners, for our investors, we have a problem. They're not going to be happy. And now they're going to start chasing this. Look at the move. Look how you're over the 50. Look at how this formed a flag. Look how it broke out. Now, I'll tell you to look at 13Fs when they come out. But where was Druckenmiller telling everybody that the stock was too high and he took money off the table? Right in here, right? This is where it broke the 55 and then it worked its way back, got over. Okay. Really important to remember this stuff, guys. Now, if we take a look at this and we look at the move, it's only up about $200 from there. Right. And if you look at where you're at right now going into earnings, I think anyone's going to have a really hard time disagreeing with me that this could now be at a new high even before earnings. To the point that if you look at the close and you say that the close is, which it is, 946.30, and then you come here and just look at that close and then go, that's a 950 close. Okay. And then just come straight across. Okay. So the highest close is right here at 950. What is this? 946.30. This is the second highest close that you've ever had on NVIDIA. And it's right there, and we're up about $3 after hours. Okay. This is really significant. And people are going to blow this off and say, we're probably going to pull back because of this and that. And it's just like it was and nothing's changed. Nothing's changed because you don't understand what's changed. Just because you don't understand what's changed does not mean that nothing has changed. It's important for you guys to get that. Right? A lot's changed. There's a reason that the 10-year plummeted today and broke the 55. I use a 12, a 22, a 55. You should use what you're comfortable with. There's a reason the dollar broke the 55 today. Okay? So you can look at the market and you can say nothing's changed, or you could try to understand what's actually going on out there and being profitable. And I want to just comment on this. That is your job as a trader. Your job is to make money. Your job is not to be right. I'm wrong all day long. I specifically show the win rate of one of the accounts because for some reason people think win rate is tied directly. It is an indirect correlation, not a direct correlation to your returns. Okay, period. It's just a fact. Okay, what you make on the move is what's most important. All right. So I showed this chart the other day. Let me do it this way. I'll show you this one. I showed this chart the other day. When I showed this AMC chart and I showed where we got in it at and where we got out of it at. All right, this is where we got in, right in here when it flipped, 948, right in this area. This is where we sold. I showed you the timestamps. I showed you the live trade. And I also showed you the book where the trades went off. All right. So we captured from here. Okay. Now I'm saying this for a reason. So that's the move that was captured. Okay. It's actually a little lower. Let me show you. We captured from here to about, let's say we got stopped out here. We didn't, but let's just say we captured that percentage of the move, right? Okay. So if we captured that percentage of the move, which we were actually selling into this, but let's just say it was only here. That's the majority of that move that we've captured. Okay, the only thing that we missed was this little bit up there. That's your job as a trader. What I did with SMCI today, it's the same exact thing. What did we do with SMCI today? We bought it and we captured the majority of the move. That is your job. Your job is to go back and look and say, how much of this move did we capture? Not was I right or the market's wrong and I'm buying puts because we're going to hit the 55 and we're going to break. Do you know how many people probably got crushed waiting for this to not get through? And the majority of the people that are waiting for that missed 30 points of upside. Okay? That's a problem because they don't understand why it had a good probability of blowing through that, like a hot knife through butter, right? So the people that, this is where I'm going with it. I'm going to bring it all home right now. So the people that are looking at AMC, and I was explaining this yesterday in the room, like whether this is the real guy tweeting or it's not the real guy tweeting or who's doing the tweeting and what the tweets mean. At the end of the day, who cares? That's not your job. Your job is not to be a tweet reader and try to think what this guy's gifts mean. Is it him or was he kidnapped in Mexico? What's going on? Your job is to trade and capture the majority of the move. So when we're trading this and we're buying this right in here and we're trading it out pre-market and we're blowing it out and we're locking in the profit, that's my job. Not to interpret the tea leaves, not to figure out what these tweets mean, right? My job is to make money as a trader. It's no different than AMCI or AMC. I don't care why it moved. I do not care why it moved, right? Your job is to not interpret the movement. Your job is to make money off the movement. Same with SMCI, same with NVDA. If you understand where it's going and why it's going there, you can make money. But you got to make money along the way, not just sit there and interpret the tea leaves. And you certainly don't tell the tea leaves that it's wrong. That's it.